Uber is one of the more interesting stocks in the market right now for me, and I wanted to conduct a financial analysis of Uber, looking at the company's cash flow, the capital structure, and strategic decisions I wanted to touch on for my viewers in this video. I think Uber has a lot of interesting factors that investors will find informative, especially in the capital structure and other lesser known things about the business. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the recent trends for Uber has been a strong growth in cash flow. And in the most recent 12 months, they generated $6 billion in free cash flow compared to adjusted EBITDA of $6 billion. So they're about 100% in terms of converting adjusted EBITDA to free cash flow. And that's going to be important because the company's forecasting significant growth in adjusted EBITDA for the incoming fiscal year, which could lead to it's likely to lead to significant free cash flow growth for Uber in its next fiscal year. Another positive was that in the third quarter, Uber achieved investment grade credit ratings from Standard & Poor's, Moody's, and Fitch. And building on this milestone, they successfully completed a $4 billion debt offering. And that's resulting in a roughly 125 basis points reduction to their total cost of debt. And so what that means for investors is if Uber can borrow money at a lower cost of debt, the interest expense will be lowered further still, which will be another positive for the company's free cash flow. So not only is the company expanding free cash flow organically through operations improvement, it's also opportunistically increasing free cash flow by decreasing the cost of debt. And so they're getting a double benefit in terms of improving their finances, improving their profits, and improving the cash flow leads to money they're using and improving their credit rating, which lowers their interest expense, the interest rates they have to pay, which then further increases the profit on the bottom line, which then further improves their credit rating, and they can pursue this for a little while still and lower their costs of debt. Another thing I really liked about Uber's new CEO, Dara Kashkari, and the decisions he's made in the markets that Uber operates. Uber's not just in the United States, they're an international business. And what this CEO has talked a lot about in recent years is that they want to be either number one or number two in the markets they operate. So they only want to operate in markets where they can be the leader or second place. If they're third, fourth, or fifth place, they don't want to be in that market. They don't want to necessarily compete in that market. And so one of the things they've done is looked at markets where, let's say, they're fourth place or third place or fifth place. And what they've done is they've sold the business in those regions. But more importantly, they didn't sell the business for cash. Usually, I prefer when a business is leaving a market to sell in cash, not to sell and then get stock back in return. But in this particular market, I like that Uber took stock in exchange for selling its business because the ride share and food delivery market is a market that benefits scale. And if Uber, let's say, is like fourth place in a market, right, and they're deciding that they're going to leave, clearly the number one and number two players are going to benefit from Uber's exit from that industry, right? And so those number one and number two players are going to benefit. But if Uber sells their business to that number one or number two player and they exit, but instead of taking cash, they take shares of this business that's going to benefit from their exit, they've now got this excellent equity stake in a business that's poised for better success in the future because that business that they own now has one less strong competitor bringing down its revenue, bringing down its profit. And that's what Uber has done. It's actually built $8 billion of equity stakes where the majority is publicly listed. And these equity stakes provide Uber with some strategic insights as well into the performance of the business, but also I don't think Uber wants to talk about this because it's not a popular reason for selling your business to a rival and taking equity stakes. And thereby, it leaves consumers with fewer choices, and the prices consumers have to pay is going to be higher. And so it's not something you want to go around boasting about, but it is happening. And that is a benefit to Uber stock investors. It's not very good for customers in those regions where Uber exited, but it is very good news for Uber stock investors because Uber can now benefit from that business that it owns, or it owns significant equity stakes in, that now Uber is now participating. So they get a nice boost every time they do that. And there might be future cases where they have to sell parts of their business in other regions of the world. But this strategy, I like the way they go about it, selling it to one of the rivals and then taking an equity stake instead of taking cash, which allows them to continue to benefit from that market in that region without necessarily having to put out resources to try and grow in those regions where they're not number one or number two anyways, and trying to get up there would cost the company a lot of resources. So another thing the company is doing with this free cash flow that they keep generating is to buy back their shares, and they're continuing to they're planning to accelerate this share count reduction because they generate, now I shared with you, so much free cash flow. And I've talked about how this is an asset-light business model, right? The drivers are the ones providing the assets for Uber. And so it's the driver that's spending tens of thousands of dollars to buy a car and bring it to the Uber platform. Uber doesn't have to do that. And so the cash flow that Uber generates, it can use to return to shareholders, which is a very attractive investor proposition. And they plan to continue that. And I expect them to continue this further still as they grow larger and their free cash flow continues growing. That's going to leave a lot of billions of dollars Uber can use to buy back shares. In fact, Uber is forecasting $43 billion in gross bookings for the fourth quarter with adjusted EBITDA of about $1.8 billion, which would be growth of about 42-43%. And I already shared with you that Uber converts just about 100% of the adjusted EBITDA into cash flow, into free cash flow. So this is another $1.8 billion in free cash flow the company expects to generate in the fourth quarter with phenomenal growth rates. And I don't see this slowing down. The company's customer value proposition is just excellent. One of the 6 factors I look at when I'm evaluating an investment is the customer value proposition. How do customers feel about the company's product? Do they feel like they're getting a good value? And with Uber, it's a resounding yes for both the ride sharing business and the food delivery business. It's a resounding yes. And even on the supply side, you might hear some complaints from drivers about how Uber doesn't pay them enough. Maybe they're not treated as employees, they're treated as contractors, etc. But for the most part, drivers really like the convenience of working for Uber. You don't have a set schedule. You don't have a boss telling you what to do. You choose the days you work. You choose the hours you work. You can work as much or as little as you want. And that's a lot more attractive compared to working somewhere like a Target or a Walmart or in an Amazon warehouse or in a Starbucks, whatever the job might be, because they force upon you a schedule that you have to ask permission to take a day off. And sometimes if you really need a day off and they don't grant you permission, you could get reprimanded for taking a day off. It's really not as attractive as the convenience offered by Uber. So on both sides of the equation, the customer value proposition is excellent for Uber. And that's good news for stock investors. It's one of the important factors I consider in my framework for evaluating stocks. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.